Hi, Bill Bodner, Mortgage Market Guide. Thanks for tuning in to our MMG Weekly Recap. So this past week, the theme for our Mortgage Market Guide weekly newsletter is Yellen for higher rates. Now, earlier in the week, Treasury Secretary Janet Yellen, in what we think was just a moment of honesty, but it was ill-timed and certainly off script. She said that rates are probably going to have to go higher to maybe cool off a potential overheating economy. And boy, first off, she's not the Fed chair. So, I mean, she was, and maybe she had her Fed chair hat on when she made that remark. But being in the Treasury Secretary position, she's not supposed to be talking about monetary policy. We felt that was going to get backed off, and it certainly did. So later that day, she turned around, defended the Fed's independence, which is very important. We don't want any political involvement inside our Fed, but also said, kind of walk that back. On top of that, the next day, the Fed members came out and said, yeah, we're not ready to taper yet anytime soon. But the damage was already done. It hurt stocks a little bit intraday, but I think that stocks, especially the Nasdaq, we're getting a little of that sell in May and go away type of theme, and so that's helped interest rates a bit. And so as we finish this week out, we're looking at the 10-year note yield at 156. That's wonderful. And so the range again is at bottom at 156. 175 is that top line. So managing your pipeline, we're really at the lower end of that range, some of the best pricing in a while. So it's really good. So next week, though, we want to share with you the big thing that we're thinking about right here. And it's inflation. Right? We're going to have a CPI number next week and where we are with mortgage rates. So mortgage rates tip beneath 3% as evidenced of Freddie Mac. And so going into the next week is going to be very, very interesting. This chart, which is public information, it's the St. Louis Fed. The red line is the 30-year mortgage over the course of the last 50 years. And the blue line is the year-over-year CPI, consumer inflation rate. And so what's going to happen next Wednesday when CPI is delivered? For the first time in almost 50 years, the rate of inflation on a year-over-year basis will exceed that of mortgages. You can see mortgages for the longest time have been above. You can see this thing's rising from a very depressed level, and we're now going to blast through mortgage rates. And you can see what last time it happened, crazy enough, right before a recession started, right? That was in the 70s. Those are pretty crazy times. And it happened again over here briefly, right? It'll be interesting because now what we got to do is the market is prepared for a hot number. But what we don't know is how hot that number will be. And we don't know how the bond market's going to react. And everybody's saying, the market right now, if it's worried about inflation, it's not telling us with the yield at 156. But next Wednesday will be very, very interesting. Something you're going to want to share with your clients. So I hope this finds you well. Have yourself a great weekend, and we'll talk to you soon. Bye for now.